What is up, Colorado? This podcast is our February monthly market update for Pueblo and Colorado Springs, Denver, and now Northern Colorado. So excited to go through market stats up and down the Front Range. Plus, we'll talk about a bunch of deals in each market because every single market has rentals that we're buying or selling. And we'll play a little guess which market is going down in price this month. So with all that exciting news, Jenny, we'll just start south and work our way up north. So Jenny Bayless, you're down south. What is going on down there?
I think it can best be summarized as I have no clue. That's all right, end podcast, that's my sentiment. Yeah. So just some really, really high level stats that we were kind of talking about before we went live is that there is a really significant year over year decrease in prices for median sales price in Colorado Springs of about 5.5% decline. So meaning February of 2022, median price was $465. February of this year was $440. So I was just kind of curious to see, what the highest median price point was over the last year. And it was June of 2022 at $495. And if we were to hold steady at current median price of $440, what that would look like from a year over year standpoint. So if all those things hold true, we're looking at about a 12.5% year over year decline in price for median. So I just thought that was kind of interesting.
Wow.
Just extrapolating it. And I made a lot of assumptions in that. So we'll see how it actually plays out. But kind of on the flip side, sales went up month over month. So between January and February of this year, sales went up a little bit. And total active went down. So I don't know what's going on. It's a weird, kind of a weird combination of activity is kind of picking up a little bit, but maybe not so much on the pricing end of things.
And Jenny, do you think a lot of that is coming from sellers kind of adjusting their prices, or do you think it's coming more from concessions and having to, work from the buyer side to get those prices down?
That's a really good guess. I think a lot of last year was kind of pie in the sky numbers and people were just getting it. Whereas this year, maybe sellers are being a little bit more methodical with their pricing. So I'm not really sure because properties that are priced right, like just anecdotally, like I was talking to Leah before we jumped on, open houses are really busy. We're seeing properties that are, decently priced and just going off in the weekend again and seeing competition, like, multiple bids again. So I don't really know what is going on. It's very confusing when you look at stats and then when you look at what's actually happening when you go to these properties.
Yeah, it's reality and stats, little mismatch at the moment. Yep. All right, before we start talking about deals, Preston, what are you seeing prices in Denver? So Springs is down. What's
and
Denver?
We're up 1% average price from this time last year. Median price year over year in Denver did go down 2%. So again, not really sure what to make of all that. I think, we're kind of flatline right now, give or take. But to echo what Jenny said, I think, it's definitely not the same sentiment we're seeing in the market right now as what the numbers present, because when you go to open houses, when you're, talking to other agents, submitting offers, looking at things, there seems to be a lot more activity in the market than what the numbers dictate. So again, I don't know what to make of all that, but I think it's really interesting, kind of when you look at the data versus what we're seeing boots on the ground.
So I want to ask the panel here because I always, about every other month, I usually get roasted in the YouTube comments of something about average price versus median price. And I go back to like middle school math and I know the definition, but don't really know from a statistical standpoint which one matters the most. So I'm curious. Denver is a great case. Average is up 1%, median is down 2%. 2%. So if someone's better at stats, when you look at that, how do you make it that? Like, I know median is the middle. Average is the average, but
that's why I'm saying I think it's really hard to say what actually means what. And at the end of the day, it's all going to be down to the data that you have and kind of how you're looking at it. And so for me, looking at those those numbers for Denver between average and median and where everything's at, it basically just tells me that things are kind of, staying status quo for the time being. What are your thoughts, Jenny?
Yeah. So if I go back to my stats class, if I can remember from that, I think that median is probably the better stat to pull from, because it's like you said, it's sticking to the middle of the pack. So we're taking out some of those more outliers. Like if someone sold a $5 million luxury property, like that's not typical. Let's take that out when we're analyzing that. So that's my assumption on looking at these.
Great. I'll go with that. All right. Mr. Newt Wyler, you're a new face to the monthly market updates podcast, which we're excited to have you on here.
Thank you.
So we actually recorded a podcast earlier today while recording this. Newt's been a broker for about 8 years now, up north and also in Wyoming.
Yep.
And then as of a few weeks ago, he officially joined Envision Advisors. Yay, we're excited to have you, Newt.
Yay.
Go out there and help us build out the Northern Colorado presence. So, Newt, what is going on with prices up north?
Well, like Jenny said, down in the Springs, in Greeley, Loveland, and Fort Collins, it's down significantly to about the 5% year over year in February. But in Longmont, it's actually up 6.7%. So it's...
You said Longmont's up 6?
Yeah.
Wow. Okay.
Interesting.
So apparently more people are moving to Longmont.
Okay. So most of the markets down there are down about 5%, with Longmont being the one outlier where it's up 6%.
Yep.
Interesting. Okay.
Greeley and Fort Collins are about 5.7% down, both. And it's 3.4 down in Loveland, Berthoud.
Yeah. Is anyone brave enough to take any guesses as to where price will be next month or in 6 months? I'm so like what Jenny was saying. I'm so like with what's going on the Feds and banks last couple of weeks. I'm just so like,
there's
what's
so
going to
many
happen?
Variables out there right now. I think the biggest thing that we're going to be dealing with as we move into prime spring buying season and into summer is, again, an inventory issue, right? You've got a lot of people that are sitting on interest rates that are below, 3.5%. Yeah, they may want to move, but they're looking at where interest rates are at now, and they're, not quite motivated to really do anything. So I think that's going to be a big thing for us as we move into the rest of the year, is that, inventory is still going to be a problem. And I think properties that are priced right in locations people want to be in are going to fly off the shelves. And I think, that's what we're going to be up against.
Okay. All right. So, you're about to say something new? Okay.
Go ahead.
So we got some stats here. I mean, markets are flat, down a little bit. But that's interesting. Prices are down. A lot of properties have, multiple bids going on right now, which is a little contradictory.
Yeah.
But in every single market, every single one of us has got deals going on recently. I want to go around and talk about that because while, the news is not like probably a healthier, positive thing to watch for right now in terms of economic news, there's still a lot of deals being done by investors where, yes, market conditions are tougher than they were last year, but for a lot of investors, based on what their goals are and what they do with their portfolio, they're still out there buying, selling, trading up. Again, Jenny, we're going to start down south, work our way up, because I know you have one in the Springs, which is a great rental, but also using an ARM product, which I think we're seeing more and more of. So walk us through that deal and how that was a win for the investor.
Yeah. So these clients, they're under contract on a beautiful condo in a beautiful area, like very, very well maintained HOA facilities. And their strategy is they're just going to buy a really stable property. They put down, I think 35% for an ARM product. And I think they're coming in at, I think they locked in at 6.5%. And their plan for this property is to add to their portfolio, and they have a set number of properties that they want to get. They're very, very close to attaining that. And then they're going to just start paying down their properties. So this one is high on the list. We'll see how the very last one works out, but this one is probably target number one for them to pay off. So their goal is to pay this one off in a couple of years. And at that point, it will presumably be a very low maintenance, solid rental property for them.
And also, I mean, a clear reason to pay it off in the next 3 to 5 years. Hey, go out there and get a 7-year ARM product. Rates are better, less point buy down. And who cares about years 10, 20, and 30 if it's going to be paid off in year 4, right?
Yeah, exactly.
And you're going to be paying down the loan balance, right? So at the end of the day, go out and refinance it if you need to, but you're still going to be better off.
Yeah, and that's one thing we're seeing more and more investors do is using a lot more ARM products. Again, some people are comfortable with it, some aren't. You can figure out what the best thing is for you. But we're seeing a lot of investors. We got a couple good banks with some really good 7 and 10 year fixed ARM products, which in my mind, if you're at that 7 or 10 year range, I personally feel very comfortable with
doing something with the property at that point, right?
So between 7 and 10 years, I'll either be selling that or refinancing it. I won't be paying it off yet, but I'll be selling and refinancing it. And then Jenny, down in Pueblo, I know Leah has a duplex down there right now, which sounds like a pretty awesome deal.
Yeah. And before we moved to Pueblo, I also wanted to mention she has a house hack property under contract with some clients where they have plans to add some bedrooms for value add. And this is in Colorado Springs. And they're getting it for, in my opinion, a really great deal. Like the sellers just wanted to be done with it. They knocked quite a bit off purchase price and concessions. So, more to come on that particular deal. I'm sure we will do a separate podcast on that. But down in Pueblo, Leah also has a buyer, a traditional investment buyer, buying a duplex in the mid 200s. And it's super close to the Riverwalk, which is a very desirable area. It's up and coming, lots of shops and restaurants, and a very, recent build, I would say, in the 90s, which in my opinion is great for a rental property because hopefully you have a little bit less happening in there. And, once he raises rents to market rate, I would say they're probably $1,100-1,200 aside. He's going to be doing quite well on that property.
All right. So duplex, mid 200s, great part of town. And it sounds like when they're up to market rate, it won't be actually too far off the 1% rule in terms of purchase price and rents, right? If I'm doing my mental math correct.
Pretty close. Yes, pretty close.
Wow.
So,
all right.
Yeah.
Well, that's exciting to see.
I think so. I was pretty excited when she told me they were able to lock that one up. It was obviously a competitive process on that because other people saw it was a good deal too. So, the right deals.
Are the buyers putting down 25% down conventional or kind of what they're doing with the down payment financing?
That's a good question. I do not know that answer. I think they're just putting 25% down and it still works, but I won't swear to it.
Yeah, looking at that, just kind of gross rents to purchase price, looks like it would work for that. All right, shifting gears here. Going up north?
Yeah, let's go up north.
To you, Denver. Preston, talk about Denver, please.
Yeah. I think, kind of just echoing what we're seeing across the market right now, but there's a lot of stuff that we're starting to see rents coming up a little bit. Been out looking at some properties over the last week and a half, 2 weeks that are actually cash flowing now. We're seeing some stuff, above 5.5, 6 caps. So I think that, there's definitely some opportunity out there and some things to put your eyes on. I know we've got some off market deals as well. That have kind of come across our desk. Some of those we blasted out in our deal blast. So yeah, I think things are definitely picking up and we're starting to see more activity and more things happening in the Denver market. But buyers are still able to take a little bit of time and, be a little bit more picky with what they want.
Yeah. And so it was really exciting because you said, you looked at a bunch of duplexes, fourplexes the last couple of weeks here. And a couple of those were solid 6+ cap rate properties with
30%
actually real
down.
underwriting.
Yeah, real underwriting, 30% down.
Pieces of crap.
No, they need a little bit of work.
We've
right?
all seen some of those multis, okay, let's get real here, guys.
Carpet, a little bit of updating, but no, they weren't complete trash, and the numbers actually worked. And
it's not the 1902 Inglewood duplex. That's a 4% cap rate that people used to sell.
Yeah, it still has aluminum, electrical wires. So,
okay, so you're starting to see cap rates drift around the 6% cap rate plus.
Yep.
And then something else that is exciting, we're in the process of finalizing a bunch of details on investors selling about a 25-unit portfolio.
Yeah, 20 to 25 units. We're still working on ironing everything out. But
okay. Yeah. And these are all in the Denver metro area. So I'm bringing it for a couple of reasons. One is that next couple months, we're going to have a bunch of like really solid rentals in like that 6 to 7% cap rate range.
Yep.
So if anyone's interested, definitely reach out to Preston.
Yeah, please let me know. We've got a mix of studios to 3 bedrooms. So we're kind of working on, like I said, finalizing everything, but it's going to be a fun little portfolio to work on.
Yeah, and a lot of these will kind of keep off market just to help line up the timing. So if you want to buy a property on there, let us know. If you got some 1031 coming up as well, let us know, because there might be some good, matching the timelines on there. But also brings up another like a trend that's been going on for a while, or starting to, as people have been talking about it, is for a lot of these investors who have been, investing for 10, 20 years, I'm seeing more and more of those investors starting to exit parts of their portfolio.
Yep. With
the assumption being, hey, you know what? I've been investing for 20 years out here, had the appreciation part of the last 20 years. A lot of these investors are kind of, going to more of that next retirement phase. Like, I want to not manage 20 properties. I want to
get rid of some headaches, right?
Yeah, go passive, go triple net, whatever. And so, I mean, this example investor, case in point shows that. I've talked to more investors thinking about that as well. Mm-hmm. And so I'm sharing that because, there's, I think that's another play in the market right there. Of course, that depends on those properties' performance, but also the strategy, or I should say the goals of the investor as well, because they're at a different phase in their career and their life. And I'm like, you know what? I'm going to take the great run I've had. I'm going to go put that equity into something that's less headache and easier to manage.
Yep, absolutely. I think we're starting to see more and more of that in the market as well. And, even just looking through, listings and MLS and different things like that, you see a lot of quote unquote portfolios that are starting to be listed. So I think that there's definitely a trend in the market for that.
Yeah, I mean, someone out there, like, keep your eyes open for that. Also, hey, if other people do it, I think that's a good indicator that, hey, for some people, depending on the product performance and their goals, it's a really good move to make. So again, if you guys need any help with like ever evaluating, hey, should I keep this property? Should I sell this property? Reach out to any of us. We can help you figure out that math and the equation, because it's like half science and also half art. Hey, what is your goals? What do you want to do? Because there's still a lot of great deals out there, but if you want to go hands off, not deal with stuff, well, then you don't need to buy more rentals.
Yep,
you can
exactly
do easier stuff as well and reposition it. So that is really exciting to talk about. And like I said, we're going to start getting those out there listed probably by the time this recording goes live. Yep. I think that all the I's will be dotted and T's will be crossed on that. So if anyone has interest in 6 to 7+% cap rate properties, reach out to Mr. Preston Newberry. And then on that same line, going up to you, Newt, now working our way up to Thornton, we've been working with clients, same thing, not selling a 25-unit portfolio, but a landlord with a couple properties, and you're about to list a rental in Thornton, take a heavy equity rental in Thornton, 1031 it, and buy 1 or 2 more better cash flowing properties, North Denver to Northern Colorado, right?
Yep.
Yeah, walk us through all this.
Yeah, so he's got it's an attached property that he's got in Thornton that he's looking to cash in, take that 1031 and move it into potentially 2 other long-term rentals that he can get anywhere. We're looking from 136th Avenue up to Longmont.
Yep.
So, and the price points are sustaining that we could probably do that.
And this is a really like, I think it's such a fascinating thing where it gets like, this is like the fun part of real estate to me. It's kind of like doing like the portfolio optimization.
It's like a puzzle.
It's a never ending game and none are the same.
Right.
Like, so for this investor, they're looking at retirement.
Yes.
But he is taking a property where it's been a great performer, great long-term rental, lots of 6 figures in equity, but can go out there and reposition to a property that he can do some room-by-room rentals on, so he can buy a better performing property, but also increase cash flow. And I know we don't talk about that much right now, but even in today's market, with the way prices have gone and interest rates, there's still some very interesting trade-up opportunities if you're willing to change your strategy while you're mapping out with your goals. And he's like, hey, for me and my wife, when at these goals, I can do this. Let's do room by room.
Yep.
Makes sense. Boom. Let's go. So like great job in putting together. I think it's also just a great example of showing how like it is always dependent on how you got the market, and prices go up, prices go down. We talk about it, but the market's only part of the equation, and it comes back to what the investor wants and what his or her goals are.
Absolutely. And I think that's one of the things that we're really good at with, the Envision advisors and, everything we've got over, at the team is that we're able to help people optimize that portfolio. And the strategy is going to change based on the market conditions, your ultimate goals, where you're at, what's going on. And so being able to take this long-term rental for Newt's client up north and say, hey, you know what? This is where I'm at. This is where I want to be. I'm willing to change my strategy, and we're going to go do something new and different, but let's make it happen.
Yeah.
Well, and I think the one thing that was helpful too was the call that we had, Chris, was that you're just coming at this from different ways, just kind of throwing the ideas out there. So that was the fun part as well.
Yeah, I get the fun part. Then you guys actually have to go out there and do the contract stuff. So it's a great relationship because you guys can do what I cannot do, which is go out there and put deals together and make it all get to the closing table.
That's what we do.
That's right.
That's why we're a great team. All right, so last deal I want to talk about is you recently sold a long-term rental, or you helped a client buy a long-term rental in, was it Greeley or Windsor?
It was Southern Greeley.
Southern Greeley.
Yep.
Okay, so give us a high level on the investor, what he or she was looking for, and just a general price point and performance of that.
This was their fourth investment property that they were looking to. Their strategy basically is to have the portfolio in place for cash flow for retirement. So basically, we were working together quite some time to find the right fit for them, but we found one in Southern Greeley that was, as a smaller 1,200 square foot, 3-bedroom, 1-bathroom house. We picked it up for $252, and with the rates in the market.
Did you say 250?
Yeah, it has a 2 in front of it.
That's not a condo.
Yeah, I was going to say, I don't know the last time I saw that wasn't a condo in the metro area.
I actually kind of figured it once I threw that price out. We may start getting some calls from investors.
Yeah.
May want to talk to us because Greeley still has those numbers.
Yeah. So 252 and it rents for
$1,850.
$1,850. And was there much work that needed to be done or?
Nope. It actually just had exterior paint and roof were just replaced right before.
Okay. It was turnkey, ready to go?
Yep. Ready to go.
All right. So that is...
excuse me. I'm sorry. They did add a back door because the back door was somewhere else and it had been walled over. So yes, they did add a back door.
So $1,000, right?
Yeah.
Because the few times oh wow, that house is so cheap. Well, yeah, but it needs $100,000 of rehab,
right.
Or the foundation split in two, and the house hanging off a hill. So that's really exciting to see, and we're going to be doing a lot more deal underwriting up there in northern Colorado with Newt on here because obviously you're seeing the high level 252, 1815 rent. And so let's see. So we can compare this. So 252 in Greeley, 1850 in rent, duplex in Pueblo, about the same price point, about $2,400 a month in rent, right? Mm-hmm. Wow. Okay. So really, really cool to see these numbers here. And what I just kind of end this podcast on is, we talked a little bit of stats. Obviously, you always want to know what's going on with the market, but make sure you don't just pay attention to the stats or what's going on, through the headline news, because we talk with investors every day for the most part. And a lot of investors are buying, selling. Newer investors, I think they're probably the hardest in the market right now because, it's new, it's first, it is a tougher time in the market.
Yep.
So if you're a new investor, there's still opportunities out there. We'll be glad to help you out. But for current investors with portfolies out there, man, there is opportunities out there. We'd love to sit down with you, help match up how your current portfolio is performing, and then match up with your comeback, revisit your goals, and then help you figure out the right moves to the marketplace. Because one thing I'm excited about up north, too, is we've had, investors in Denver saw property go down south, Springs or Pueblo. And I think as, more and more happens, because it's all drivable, I'd rather drive to Fort Collins than buy a place in Tallahassee. So as we're able to get a better, glimpse on the market, really expand our team out there, we have better resources to help people understand what's going on in the market. And if you do want to make a move, we kind of got all the right puzzle pieces in place to help people out. So with that,
absolutely,
I'm excited, guys.
I'm excited too. I'm really excited to learn more about northern Colorado. I'm having Newt around, and it's going to be good.
Yeah,
it's going to be a great season, a great spring.
Yep. All right. Any final stats, deals, thoughts? you guys want to talk about? Anyone brave enough to comment on the Fed's move here next couple of days? I'm not. But...
Nope, I'm out.
All right. Cool. Awesome. Jenny, thank you. Newt, thank you. Preston, thank you.
Thanks, Chris.
If you guys have questions, comments out there, let us know. Email us. Leave in the YouTube comments. Happy to give you more data as well if you want to see very in-depth data. We've got all that as well. We just don't talk about it on the podcast because we don't want you falling asleep while you're driving. So thank you so much. We'll see you guys next month.